There we go. Okay, I should be coming through. Let me get a sound check. Looks like Discord's coming through. Can you guys hear me on YouTube, on TradingView, all the good stuff? All right. I see the thing moving. That should work. I see Honey Bunny typing. What's up, guys? Okay, good, great. All right, we're good to go. So, I hope everyone had a good week. We had a good day. I've been talking all day. I've been trying to catch dips here on the futures, but we are decidedly bearish. And I kind of knew that coming into this week. I'm going to look at that here in a bit. Of course, going to look at crypto markets. Just do a quick market recap of what's going on and what I think is going to happen into next week. Next week in the stock market is a short week. Just to remind everybody, President's Day. I think we used to honor George Washington, but now it's all presidents. But the stock market is closed. Looks like we got some good people streaming in today. So if you're joining, make sure that you type something in the chat. We got Discord going in the live trading, or excuse me, just chatting channel. Trading View, good to see everybody there. And YouTube.
Don't forget, futures open half day Monday though.
Oh, they are. Is it open?
Celebrate capitalism.
Good. I was wondering if you were there because I wanted to hear you chime in, see what your opinion is coming up. So, all right, well, let's get into it though. So, what did the markets do this week? I'll clean all this up. If you want to see that trade, you can join on the Discord, and that's where we're at every day. So 3 weeks ago, we've been looking at, of course, this recent collection. Yeah, it's definitely an interesting day for the SPY. I was looking at this correction, and I've been operating under the thesis that, well, we're going to have a 10% correction, once every 2 years or so. And so I've been expecting a bounce, but the chart is telling me something differently. We came up to the 50% of the retracement. Now, if this was any other trade, I would short it off of this 50%. Not only did we do that the last week of January, but or first week of February, we did the second week of February, and then this week we could not get back up there. So just the most likely situation is next week we're going to come back down and we're going to try to retest the low. So I really see the stock market making it hard for people to get long on this dip. And that means we're going to play down in probably the 4200s here on the ES. And, we're not getting any help from the NASDAQ either. The NASDAQ's basically telling us the same thing. 3 weeks ago, held the top. The other thing about the S&P 500 this week, you even had a shot to get short on this little small rally. Small dip. We had this dip off the high, comes up another 50%. So 50% inside of 50% is holding resistances. Sure, they could bounce it here. The lizard people, whatever, could do anything, but I got to acknowledge that we're holding resistances and we're going down. So the most likely situation is we go down here. Bitcoin, to touch on it really quickly, it's trending like the rest of the risk markets, and it's not good that we made a lower high. I really think that actually Ethereum kind of encapsulates this a little bit better, because what it did was held what's that 50% there? Yeah, it was the 50% of the rally, which it hung around with here, broke below, held it, came back, and then held it again. It held a resistance again. Again, lower high on the major cryptos. I'm not saying that we're going to go into a bear market, but I am saying that next week is probably going to be bearish. And so that's what I'm going to be looking for. This week, of course, being bearish was the thing to do, but now that week's over. So got to look ahead into the next one. But the order of the day, we've been trading a lot of futures this week. This week was actually really good. There's a lot of moves still to be made trading the index futures. Something just ding for me. That's probably my after Friday alerts. So let's take a look at the chat and see what people want to look at. I got my topics that I want to talk about, but let's talk about what you want to talk about. Let's see. Ripple is in the news again. If they who's okay, if the regulators go after Ripple, Sadie Walker, yeah, Ripple to me, I had a friend of mine that I have a little bit of a beef with Ripple because a friend of mine decided to start trading Ripple at basically back in Thanksgiving of 2020. And he asked me like, "Hey, I really want to use some leverage." And I tried to explain to him the math of leverage and how if you have a 4-to-1 leverage and you get a 25% move down on a cryptocurrency, it's going to wipe out your account. And he just kind of nodded and he was like, "Okay, but all these people are making money. I want to as well." So this move, which was the regulators, the SEC coming in and killing Ripple, that was a massive move down 50%, like a 65% move in like 2 weeks. Just absolutely wiped my friend out. So yeah, I'm very not happy with Ripple and the regulators. Where is that thing that I linked earlier this week about regulation? Hold on, where is that thing? It's one of my kind of pet peeves. Yeah, I don't know if anybody has been following the developments in Canada, but not only are they banning and shutting down the bank accounts of people that have been contributing to these protests, but they're also going after cryptocurrency. They have acknowledged that the truckers are being funded by cryptocurrency and they are trying to shut them down, which you may ask, how can a government shut down cryptocurrency? It's supposed to be a technology that can't be censored. Rhetorical question. Can they? I'm not going to make this a pontification on the live stream. I've said enough about that. I actually have a video coming out. I did a talk on Wednesday. I'll be putting that out this weekend about the Bitfinex hack and how that relates to regulation and how regulation wasn't really needed to protect people from those hackers back then. But this is what regulation brings you. Mhm. It makes it where you can't get your cryptocurrency. So let's see. You've been scalping the QQQ on the 5-minute up and down all afternoon. Yeah, man. We, depending on the day, on Discord, you should join us because I'm here every day. We got a couple different styles of trading that are going on, and it's either the Nasdaq or the futures. Excuse me, it's the futures, either the E-minis or the Nasdaq, the NQ futures. Are you when you say that you're scalping the QQQ, are you doing the actual ETF or are you doing options? Because I have a point if you're doing the actual QQQ. So let's see. Let's go to the just chatting. What we got? Honey Bunny. Right now for day trading, I use Thinkorswim. CFDs are not something that Americans trade. We trade options. CFDs are for people that don't have options. But yeah, I use Thinkorswim for most of my moving. I'm not saying it's the best for futures. In fact, it's a little bit inferior. It's kind of slow. Okay, options on QQQ. So that's good. The only thing I was going to say about that, hashtag not financial advice, but you need to be careful about what options you're using because if you use if you're trading the QQQ and if you're trading the QQQ itself, which is of course the ETF, let's say that you have a great day and you make a win and you're up like $100, and then the next day you go and you take a loss for $100. The problem is they don't cancel out to the tax man. You don't get to count that loss because of wash sale rule, and so you end up having to pay taxes on your $100 that you don't have anymore because you lost it. That's a very bad situation to be in. And the same thing's going to happen if you use the same QQQ option. So if you're day trading the options, try to always use a separate option every 30 days. And it depends on how much you trade. That's going to be hard. And that's why I prefer futures because you don't have that kind of restriction on futures, the wash sale. So be careful, because you could basically, if you're trading the same futures or if you're trading the same instrument, you won't be able to count your losses against your taxes. It's fine if you never take losses, but if you do take losses, you're going to end up, let's say that, you make $1,000 and you lose $800, you got $200 profit, but you owe short-term capital gains of 35%. You owe $350 in taxes on your $200 in profit, and that would not be good. Do I ever pay attention to the 38% and 68 retraces? That is a really good question. No, I don't. I don't need to. Today, let's just look at today. Today was a good day. Today was a good day. Without going into it, I will say that I took two certain losses trying to trade this up, which is fine. But then the win was here on this rally. And again, on a day trading time frame, just like everything else, I'm looking for 50%. This was the entry here. We had right here at I think it was 12:30. Or was it 1:30? 118 up to 130. Pull back to the 50% retracement. Let's just say that we added in the other Fibonacci's. That doesn't really help me, does it? Not at all. And so the same thing should work on every time frame. And if I waited for the 61.8, it wouldn't have gotten filled. If I would have been the 38.2, it would have been too early. And those are a bunch of lines that make my brain hurt. So I'm going to go on just the 50% and pretty much everything. And then when I was looking for the profit target, I'll tell you what, let's take a look at here. Look at this. So I'm going to look for the 50% of the move that got us down there. And so my first profit target was here. And then where was the, yes. And so, yeah, I remember, see, I went and deleted all my lines. Nope.
We ended up taking profit at the overnight or the low of yesterday.
Is that, yeah, that's right. So the low of yesterday, there we
Yesterday's
go.
low.
Yeah, which matched up with that. So it wasn't, yeah, there you go. Thank you for reminding me. So it wasn't perfect, but then again, here is, here's this level where price got up to and spiked above it, came off of it, spiked above it. Still a good profit target on this rally right here.
Hey, Norak, to that point, something that I think we're noticing is that when there's other business in the neighborhood, like where that 50% overlaps the low of yesterday, they're probably going to hit both when they're in the area with some kind of momentum.
Getting into traffic. So to your point about the 61.8, it did, like, the 3 o'clock bar hit the 61.8% retracement. Yes. Okay. There you go. If you want to be that kind of a trader, if you want to look at these different levels, you can. But I need something that's simple. I was just talking about this today, how some people can trade on feels. I'm very emotional. It's, they say remove emotion from trading. The way I do that's rules. And if I'm constantly looking at, 3 different levels to buy something or sell something, it's not going to work for me. I mean, I got to admit, by just drawing this out to your question, it's a very interesting academic experiment. Yes, the perfect time to sell this rally was at the 61.8% retracement of basically the overnight move down to the low. So this would have been was it 11 o'clock last night high down to here 61.8. Yeah, we can find instances where it works, but am I going to add that to my style? No. But am I going to tell people not to add it? No, because I can show you, like a lot of things with technical analysis, you can see where it works. But you got to find something that works for. Where's my buddy Amer? He's showing us all kinds of butterflies and bats and all kinds of stuff on the charts, and they're really cool. But the problem is, if I put a bat on my chart, bats make noises that are not audible to human ears, and so I don't know how I'm going to be able to be alerted to when a bat symbol happens. So you really just have to have a system that works for you and develop that over time. For me, 50%. That's it. So find something that works for you. All right. Let's go to some of the topics I want to talk about this week.
If you have anything for me, Norak, you got me for about 10 more minutes.
Yeah. Go. Why don't you talk it? While I figure out what I want to talk
You don't
about.
need to have anything for me, but if you do,
No, go ahead. What's your input? What do you think is going to happen next week?
well, we're definitely bearish. I'm interested to see how the month closes. I think that I could see us rallying unexpectedly and then going to check out the lows. I'm just kind of of the mind that the way this thing is chopping around, the way we're chopping around right now, and you've experienced more corrective phases than I have, so I would defer to you. But it really does seem like they're trying to catch people unawares on both sides of the ball. It almost would seem too easy if we just bottomed out next week. I could see us bouncing and then going down into March and checking out that low. It just feels like it would be the most painful for the most people.
To spike below the low and scare people would be yes. I mean, it's the thing that would panic people the most. It would get me a little bit worried. Yeah. I mean that would hurt the most amount of people because people would start really questioning their shorter term longs, and yeah, that would be it. Um, and if again we go back to January of 2018, which I really kind of refer to, on that move down, it's a little more put together here. They've really extended this out, but again, it went for a second retest of that low. Keep talking about your thoughts because there's one more instance that I'm trying to remember in history when I saw something like that.
The only thing I would say is don't have a bias right now. If you're depending on what kind of trader you are, I think having a bias right now is a little dangerous because there are days where we're up 100, down 100, and then we end in the middle. I mean that's kind of what we did today, right? We bounced overnight on news. We came down on news. We tried to get back up, fell away 60 points, rallied all the way back up 50 points, and then came back down 30 points. I mean, you just can't have, if you're going to be a short-term trader, you can't have a bias right now. And you have to realize that you get to cut your swing trades quick if they're going against you because it can happen overnight in this market. It's tough to initiate new stuff.
Yeah. So thank you for pointing that out. I think a good example there is, in this, I don't know if you've heard me before, Cole. This faked me out. The 2015 August, because I got out of like a lot of long-term positions in here, and then it kind of tricked a bunch of people into getting long, and then that's exactly what it did. It swung it down and scared people not once but twice before launching into yet another historic crazy rally, which they killed in 2018. Yeah, I mean it's that's why I like doing this is because you don't know the future. Every day is going to be interesting, but I don't really worry about a bear market because there's going to be a lot of opportunity. It's going to suck for the stocks that you hold, but you shouldn't. You should have the appropriate time horizon on them. You got anything else, Ant?
Well, besides nobody knows what's going to happen is, for me, I'm trying to keep my bias in the sideline when I'm trading, but the inflation, war, what else we got going on right now? COVID is kind of over, I guess. Rate hikes, and we've got all this stuff. It hasn't taken the market down yet. There was a kind of a panic sell on the 24th, right? We formed a bottom.
Mm-hmm.
I could see us doing that one more time, and that would kind of make me feel better. It's this slow, drippy business is kind of, is worse, right? Because we're not making higher highs. So, I'm suspicious of any bounce that we get for more than a day or two, unless it starts closing back above. I mean, I forget what the ES number I had was, but for NQ, I think it's like 15,300 would have to be where we have to rally back to and hang out and stay there before I start believing in like an actual trend change. So until that happens, I'm willing to flip flop day to day on my trading and even intraday.
Yeah, I mean that's been my strategy with the stocks that are down in my trading account is to offset them with these with the futures, and that's the only thing you can do. Because like I said, I think earlier, the I don't know if I said it here on here or if I was talking today, but the things that I was doing in 2020 and 2021 just aren't working. I mean, they required the market, the individual stocks, to have like meaningful moves to the upside, and of course, now in this kind of market, you're not. Is that what you got?
That's all I got. Unless you
Okay.
want to start talking about
Well,
gambling and day trading, but that's a different topic. So
yeah.
no, that's
So
it.
the again, I say this a lot, but the meta is in a bull market, and I've been saying this all week. In a bull market, all these negative news events wouldn't matter. And so you really have to acknowledge that, like the key things, really, when I look at this chart, let's zoom it out a little bit. Because I'm sitting here trading this every day. I'm seeing what news is moving things every day. Um, you had the CPI number here, which created a really inexplicable rally, but that rally didn't follow through. And then you had the Bullard come in and say some stuff about how um, they should raise interest rates to 1% instead of 0.25%, which then tanked the market further. And then last Friday, incidentally, right before the close, Russia was going to invade Ukraine, and that was what this was. And so you really, at the beginning of this week, were coming up to recover from the Russia news. So we were at peace. And so peace basically brought us back to the point that inflation brought us to. But inflation didn't really change. And so we held. And now here we have at the end of the day on Friday, we have Russia is going to invade Ukraine again. A bull market would not care about all this news. I think that's really the kind of the point that I want to emphasize. Because if we can have good memories, and I have a horrible memory, but back in 2020, there was new news coming out every week about the coronavirus numbers and more people dying and more infections and all this bad news, and the market just kept on going up and to the right. It would have a day of oh no, where the media would come in and say, oh well, market down on coronavirus fears, and then the next day we'd have a new all-time high. The market didn't care. And one of the things I tried to make into a meme is bull market don't care. The market cares now about bad news, and that is definitively not a bull market. And while things can change, I think we have to acknowledge that it's not the kind of up and I mean I knew going into this year we were not going to be up and to the right, but it's definitely holding resistances and responding to bad news more than it is good news. And then
I think once we get that first rate hike in, that even though it's people think that's going to be bad news, I think the certainty of having that tough one out of the way, I hope will give the market some better stability, because right now it just feels very unstable.
yeah, no, exactly. And as far as crypto goes, I've been noticing some good news coming in this week, and it isn't recovering it basically. I think that like I said, that Canada news that they're going to ban cryptocurrency. You would think that would really there's the whole meme of what is it? Bitcoin fixes this is the meme,
Mm-hmm.
and you would think that people would be really taking that to heart, that the government shutting down people's financing would play into it, but that's not really making crypto respond. Crypto is still responding to the uncertainty about interest rates. because, like it or
It's a
not,
risk asset.
yeah, it's a risk asset. It is, and like it or not, all this free money, this low interest rate money, has gone into cryptocurrency, and that segues into a point that I wanted to make. Um, a lot of people have been looking and buying into Mara, Marathon Digital Holdings. I do not own Mara. I'm not sure if I want to, but it's been put to me the premise that instead of buying gold, what people would typically do is buy gold mining stocks. And I think one thing that's been kind of ripping this week, hold on, its stock is Barrick Gold Corporation. There you go. Okay, so this Barrick Gold Corporation is a gold mining company, and gold itself has been going up. But if you don't necessarily want to buy gold, and I'm sure a lot of people like the idea of gold going up, you can get a gold mining company. And let's take a quick look at gold. What this has to do with Marathon, is that they are a mining company. Um, they actually Barrick Gold Company actually makes money. They actually get revenue. They actually pay a dividend. And so for a lot of people, instead of trying to buy gold, physical gold or GLD or futures, what they want to do is buy a stock. Oops. Let's look at the gold company that is going to pay a dividend and get the benefits of gold, because gold has had a bit of a rally in this last week, and thus up goes a gold mining company, speculative, as well as they're potentially going to make more revenue as the price of gold goes up. And so what a lot of people I've talked to, they are invested in Marathon Digital Holdings because they're a Bitcoin and probably other crypto mining company. And so let's look at Mara. The problem with Mara, though, is that they don't make money. They actually have a negative earnings per share. They're actually losing money. So they do kind of need Bitcoin to go up. But if you notice, if we do a compare of BTC USD, I'll use the index one. It's a very, very close correlation on the chart, where when Bitcoin goes up, you actually have a looks like pretty well an outsized speculative movement in Marathon as well. And then, of course, as Bitcoin goes down, it does. And as Bitcoin has had this rise up, it almost mirrors Bitcoin in that you have right now a lower high on the daily. So I'm not saying that I like this as a way to express a Bitcoin trade, but the reason people have this is because they want to have Bitcoin exposure in like a retirement account, like an IRA, and I'm not mad at that, because if you're looking at Marathon and you're looking at Bitcoin, you understand the risks, hopefully, and it does give you exposure in a tax advantage account, as opposed to having GBTC, which is basically what people have now, lacking an ETF, which is always 18 months away. Or excuse me, is it always? Excuse me, the Bitcoin ETF is always going to be 6 months away. It's been 6 months away for the last um, 5 years. Yeah, last 7 years. The Bitcoin ETF has been 6 months away for the last 7 or 8 years. And right now, the Bitcoin ETF is 6 months away. But in the meantime, there's GBTC. Fibs are king. Well, one of them's king for me.
Hey,
So,
Norak, you have a question from Honey Bunny in the chat
Honey Bunny in the
about
chat.
setting stop losses.
I got 3 chats to go look at. Thank you. All right. How do you quickly
Just
set
chatting.
stop losses when you do day trading on Thinkorswim? That's a really good question. So I don't have Thinkorswim up anymore. If you go to what I'll do is, if you want to sit down with me, I will go through and we'll look at how to set those orders and things like that. So actually, hold on.
You can actually set them even more easily on mobile, believe it or not. You can set a
Really?
really fast OCO order on mobile. Yeah, it's
Hmm.
really easy to do on the mobile app. I'm getting
So
myself into all sorts of trouble at the gym with that.
what I typically do is I'm actually kind of naughty. I do a lot of market orders. So, but when I'm like I need to step away or something like that, I will set it. Uh, are you using Thinkorswim, Honey Bunny, or are you just thinking of using it? Because those are two different things. If you're already using it, then what we could do is we could sit down and in the market and whatnot, we could take a look at it and help you put on a trade and stuff like that. But if you don't have it yet, then we could probably I just want to know what the context of it is. Are you trying to figure out what platform to use? Because a lot of futures traders I know, they're using things like Ninja Trader, and I think uh, Manaconda is looking at maybe doing Sierra Chart. So that's a good question, Vineth. Why do 50% retracements work? Okay, yeah, let's talk about that next week. Hop in the chat with us, and we'll look at that next week after the holiday. We'll go through that. Can I talk about why 50% retracements work? Been seeing it work consistently and cannot make sense of why it works. How do I want to answer that? Do you need to know why? Is that important to use them? So I was talking to my friend lives here in Atlanta. I'm not going to mention names on here, but guy that's been running a options trading group for a while, and I was explaining this to him today or a few days ago. As I've studied different methods of analyzing price, I like to go back in history, and I'm a big history buff. Like I love if I'm watching YouTube, it's something having to do with it's gaming or history, pretty much, or trading, gaming, history, and trading. Those are like my main interest, and occasionally I'll look to how to better smoke some meat. So those are my hobbies, and because I like history so much, I like being able to go and you can bring up the Dow Jones Industrial Average Index on TradingView with DJI. And if you choose, yeah, the CFD here, which I'm not sure, I'm not sure who that is in, but anyway, DJI lets you go back and look at the history of the stock market all the way back to 1897. Wait, hold on. No, I gotta take off my indicator. Wait a second. No, I should be able to see more than that. The DJI Index CFD. Give me a second here. There's one of these that you actually see candlesticks on. Give me a second. I wonder why it's doing that. It doesn't normally do that for me. But it lets us go all the way back. Okay. I'm not sure why it's coloring this way because the other day I looked at it. But anyway, do you guys remember the 1929 crash? I don't. I wasn't born then. And no one that was trading today is probably alive that was trading. You'd be, if you were, let's say 18 in 1929, you'd be well over 100 now. So yeah, you probably don't care about stocks anymore. But the crash started September 3rd was the high, September 3rd, 1929, and it went down to. Oh, hold on. Let's be perfect. All I ask for is perfection. We went down to the 13th of November, 1929. And at that point, you came up to the 50% retracement of that whole crash, which also lines up with some nice inflection price action of the prior 2 years, 1928, 1929. The market never recovered to that level, that dip, until it hit the low in 1937, and it never recovered that 50% retracement until 1954. So that is a great historic example. Why did that work? Why was that such a powerful? Oh, it's the weekly I've been looking at before. So in this crash, you come back to the 50%. So, oh, you were born in 1929? Oh, well, I salute you. You're going to have your 100th birthday here in 7 years. And so, yeah, why does that work? I don't know. It just does. There's something about maybe half the people that sold it, stayed into it. I really see it as a way to understand the way the price moves, because it is chaos here. I mean, it's human emotion reflected in the price of things. And you got to make some sense of if you're going to find tradable signals, and not every one of them is going to work. But this gives you a level to look at and then set up a risk adjusted trade off of. That's really all it is to me. This is why I don't like fundamental analysis, because fundamental analysis is all about storytelling. It's all about narratives. I want to buy Tesla because they're going to dominate AI, because AI is the future. Thus, I need to own Tesla at any price. It has worked for people that believe that narrative back in 2018, because it allowed them to hold on to it when everyone was shorting the crap out of it. And kudos to them for making a bunch of money. But there's a lot of narratives out there that just don't play out. Pets, like that people would buy pet foods and pets accessories in 1999 was a massive story, pets.com, and that went bust. But the company that sold books on the internet, books of all things, has taken over the world. So it's not really clear. Like the narratives that people tell, I don't think they all hold the test of time. And people are wrong about their stories. I mean, I'm getting a little esoteric here, but the notion that we have a heliocentric model of the solar system, it took us hundreds of years to come up with that and break from that model. So I don't like stories. I don't like narratives we tell ourselves to try to explain things why they are, when we can just take the trade. Set up a short position here on April the 7th, 1930. Aim for a retest of the low, set our stop loss at 316, and make money. And then do that again and again, and expect that we're going to be okay, even though the market is going down and the world is ending. So, and then to just jump ahead to COVID, which was another great example of this. We'll look at the ES for this. So, we can't go back in time for that. Hold on. So on the daily SPY, here we are flying high into February of 2020. I actually moved to Atlanta to go out more, and whoops. And then you had this big scary drop, right? And a bigger scary drop. Wait, where's my data? What? Hold on. Wait, okay, yeah, never mind. And so you have this big scary drop, scares everybody out. And then on March the 3rd, yes, March the 3rd, and then March the 4th gives you another test. And then now everyone's wondering, what's going on? What's going on? And we have the crash of this decade. Again, why did it stop here? Why did it give you an opportunity to reposition yourself? And I hate to do it, but I must, you know. Again, I thought that we were going to clear it. I thought we were going to clear it because we cleared the 50% on these daily bars right here. We got a couple of closes above it. But in the grand scheme of things of the weekly, you look at the weekly close, held that level each time. And I got to acknowledge that. I don't want it to be true. I want my tech stocks to go back up, but I have to acknowledge that this is what it's doing, and I have to position myself accordingly. So why does it work? You know, and when it doesn't work, that's one thing I really wanted to talk about here. Yeah, Reminiscence of a Stock Operator, great book. If you don't have it, hold on. So you want to get, I'll tell you which version of Reminiscence of a Stock Operator. Reminiscence of a Stock Operator, for those that don't know, is in 1923. Come on, Amazon. 1923, the book was written 100 years ago. And if you read it today, you're going to hear stories about the market makers. You're going to hear stories about the crypto boys. You're going to hear stories about NFT people. You're going to hear stories about all these folks. Hold on Amazon. I'm still on my VPN, aren't I? It doesn't like me. See ya, and thanks for joining. There's an annotated version that has like historical references that I really, really like. It has a picture of a building in New York in it. It's kind of a beige background. That's the version to get because it has all those little historical versions. I really like that version. Yeah, got distracted. So yes, I also watch murder mysteries. That is another thing I watch on YouTube. Thank you. So hold on. Have I lost my video for some reason? TradingView, are you still getting my video feed? Hold on. Testing, testing, testing. There we go. My video froze over there. Okay. So one of the things, okay, it just froze on my screen. I fixed it. Let's talk more about the 50% because this is what actually a concept I want to talk about. Someone came into Discord this week and asked me what I thought about PayPal. And 99 times out of 100, if I had to bet money on it, when people ask me to look at something, it's because they're bag holding and they want me to tell them it will be okay. This has not been okay for a long time. I bought PayPal a while ago. I bought it off of the basically when we got down to this 50% right here, and we got into this range right here. There was a setup here on a lower time frame to buy it inside this range. I bought PayPal, and it all has to do with that 50% retracement level. Okay, when it broke this consolidation range, when it broke that range, I got out. Because it's no longer holding that 50%. And it sucks because if I recall, it came back up again, here, and made me think, okay, maybe that's going up. But as we know now, what do you do in a situation like this? Because you know psychologically that if you sell it here, if you liquidate it here, you're going to be selling the bottom. I just don't want to ever be in this situation. Like, getting out here gives me not less negative 41%. I think I said this earlier. If you have $10,000 in this at this point, whatever the price is, whatever your buy-in price is, you would have $4,100 less if you're holding on to it. that you could have put into something else. Zillow was another great 50% pullback trade here. You see I've got it marked up, but when it uh, got below the 50% level, you cut your risk and you don't really, I mean, I look back on it as an example, but you cut your risk and you don't look back because you will occasionally have things like this, like Lucid. Lucid was another one where you had a 50% level that it held for a good long time. And I stopped out here. And then in the days that followed, I felt some way about it. I'm not gonna lie, I felt some way. I mean, what did it do? It basically came down to the 50% of the down move. But I'm far better off having gotten out on this than waiting for this, because what do you do here? I mean, now you're bargaining with yourself. Well, if it breaks here, I'm going to get out, or if it comes back up to here, I'm going to get you don't have a strategy anymore once it goes past the point that you set your risk at, and you're not going to make good decisions. And so another one that I talked to earlier today was Baba, because I was talking to a good friend of mine that was buying this in preparation for Jack Ma launching his finance company, and the Communist Party of China shut that down. And I don't care how much you like the company, if you didn't catch it, like I'm going to leave this on here because I can tell when I've made a drawing old because I change my colors periodically. So this is an old 2020 drawing. And so it held here, came up. Where was that point? Again, 50%. And it broke below here, and you just need to get out. And then it's going to do a little bit of garbage where it kind of tricks you a little bit here. But the trend is broken at 50%. Let's just put it this way, why it works. If the trend doesn't hold halfway, then what is it holding? It's holding less than the majority of its move up. There you go. There's your reason it works, if you want to attach a narrative to it. But you just can't hold on to things like this. I'm having a hard time now trying to get into 43% down from that point. Half your money is gone if you decided to be a long-term investor. I can't excuse that. That just doesn't work in the long term. It's worked for the last 40 years, and I'm afraid that a lot of people that have been investing for a long time, they just assume that because something has worked, stocks always eventually go back up. That it works because Apple, which I try to remind people, it has had multiple in its long storied history. Here's a minus 35% move in Apple. Here is a minus 40% move. It's had some big drawdowns, no doubt, but they weren't drawdowns. They weren't. I mean, this from the high is a 64% drawdown. That sucks. Apple, on the other hand, which I think a lot of people model, okay, it's a tech company. It's always gone up. It's been a great investment, et cetera, et cetera, et cetera. I think when they model this, they just assume that 30% move is fine. It's fine because Apple has always gone up. But there's a big difference between Apple and Peloton. Peloton, which I was talking about before I got on the live stream today, it's back at its IPO price. And then what it had, if we'll draw it here now, is it had a few opportunities to hold the 50%. I was not in this, and I'm just now looking at this to begin with, but check this out. So you had, if you say you missed and it went all the way up, you had an opportunity to get into it here, okay? But you need to really get out here, okay? And then you would have felt like an idiot on the way back up, no doubt about it, because you would have felt, I should have just long-term held that level. I should have just held it. I'm a silly, but then the point is you needed to be out here because there was no other way for you to avoid this. Like, you can't just take your stop and put it here now, because again, it didn't trigger your stop here, but it definitely would have triggered your stop down there, and you've already lost with a gap 35%. And so these are the games that they will play with people to make them think that they were wrong for having risk controls on high flying speculative companies. There's a big difference between trying to hold on to the Peloton and trying to hold on to like something like Coca-Cola, which, wow, that's a pretty bad one. So big difference there. I would rather have the cash in my trading account to put into new and better opportunities than sitting here letting it bleed away, because you're just not going to make good decisions. It's gonna weigh on you. And to that end, I'll admit I made a hard decision this week to cut Tesla, and I cut it because essentially we are doing that same exact thing. We held the 50% back in December. It came up to here, great profit target that I did not take, and now we're back down here. And as I said, I have to have rules to keep me from being emotional. And when it comes down here, knowing that I had an opportunity to sell it up here, it makes me feel a way. And so I have Tesla, or at least I had it in my account, and it was bothering me. And so when we had this little rally up, I still was, still smoking the hopium. And then we came down. I'm looking at the market. The market's bearish. Tesla is not a stock I want to be in an uncertain market. And so when we came back up this week to this level right here, where, again, we broke down a little small short-term trend, which is part of the broader trend. No, I'm out. It's not going to bug me. And then the next day, it's teasing me. But as we close the week, I have more money today, more cash to put into something else than I did when I got out of Tesla earlier in the week. So that's just my philosophy. Yeah, I mean, it's here's the thing. Tesla could be the future. It could rocket up tomorrow, but I'm not going to be able to make good decisions on it because it bugs me. And I'll get back into Tesla eventually, but in an uncertain market like this is not what you want. I mean, this. No, I want something. I want something better. I want something that has a better chance to run, or I want to have capital to put into hedges, short positions if we start going down, and then maybe catch the bottom with some cheap stocks as they've gone down. And Tesla's just not anything I want to own anymore. So that's just a personal decision. Do I want to talk about Facebook? I want to make an independent video about Facebook. I'm going to make an independent video about Facebook because I know a lot of people want to probably talk about Facebook. And the meme that I've been saying is Facebook can't possibly go lower. I think I may have mentioned it in the chat and things like that. And I think I probably mentioned it last live stream. I would have had to that, on the day, February 3rd, I had 3 text messages from friends asking me if I was buying Facebook because it couldn't possibly go lower. Here's another segue from the 50%. When this was going on, and if you're wondering, by the way, where to mark the 50%, I'll tell you on the longer term time frame on nearly every single stock that trades is going to be the COVID low. That's going to define price action for probably the next 5, maybe even 10 years, the COVID low. And so that up to the all-time high of Facebook, let's just go back in time. That looks like a really good level on Facebook because I have the 50% at 260. 260 on Facebook was the level. And you have some very, very good price inflection here where you see how, price got above that level, held it here, and then that started the second leg. That makes for a very good level. And so when we got the earnings on Facebook, we open below that level. It's already broken. I'm not a buyer. And so that 100% kept me out of it there and kind of gave me a little bit of a, this is toxic. I'm not going to touch it. But then I saw so many people coming in and saying, oh, I'm going to buy this dip. It's a mega cap stock. It's bound to go up. That even made me more bearish. And I'm not going to short shares on a mega cap company, but I've been in retrospect going back through, okay, what are the things we could have done? And that's going to be coming up in a video this week because I can now answer that question. How do you express a contrarian bias in something like a mega cap like this? This is grinding people down, hurting the people that were trying to play a quick bounce. And if people bought it here, then where is the bottom? I mean, the same concept I use in day trading. I want to see some kind of a reaction and then maybe a pullback, and then I'm going to potentially play it. Let's jump back to Peloton. And I was talking, if you notice, I was looking at this on Peloton, where Peloton essentially came down to their what this 1, 2, 3 inverse head and shoulders, depending on how you look at it, at like 23. If I recall correctly, IRC, that's basically the IPO price. Here's the IPO price. Let's see what it did here. Yeah. So basically, Peloton has come and hung around the IPO price. And so now on earnings, you got this big jump. It was actually a rumor that they're going to be bought out. And so if you're trying to catch a dip on Peloton and you play this rally for a 50%, I'm not mad at you. I don't particularly care about Peloton. Fundamentally, talking about narratives and stories, I know what happens to most people's exercise equipment that they bring home. They use it a lot the first month, maybe a little bit the second month, maybe a little bit less the third month. But for a company whose revenues is dependent on subscription to a home exercise equipment, that is, let's just say, speculative. That is speculative. So, yeah. Let's see. Hey, what's up? Ain't worry about nothing. I try not to worry about nothing. The power of old levels. Oh yeah, really quick point. And let me take the note. I'm going to start wrapping up things here. Make sure that you like, share, subscribe to all the algo stuff, but more importantly, join the Discord. Unlike every other Discord out there, I don't charge a thing for it. I just want to have conversations with people and hang out. So that's my invitation to you. Today, as we were trading the ES futures, something interesting did happen. And that interesting thing was I was looking for the level. And it can be very hard, especially if people are starting out, to find in this right here what is important. What is the level? Like, where's price going to reverse if these are where you're going to be looking for the supports? We're basically today we were trending down, right? And so we're trending into where these levels would be from basically the January 24th low. Okay. And so if you're coming in here and you're trying to figure out, okay, what means anything here? Now, I basically gave you a puzzle piece of 1,000 pieces with no pictures on them. And that's what you're looking at right there. Which piece matters in here? And part of that actually comes from just doing this on every day. And by doing this every day, it meant that I was in the seat on January the 28th. And there was something very important that happened because I went to lunch. And I missed this right here. Let's dig down a little bit deeper into here. So this was, no, let's go back on the 5 minute. Okay. So this right here, if you look at it, I don't need you. I don't need the long-term retracement. There we go. This at 230, okay, that's a different one, pulled back to a very, very perfect 50% level. So remember, we've got all this junk from the 24th of January, where we had that big, huge dip that brought us down to where we are now. And then for 2 weeks, you had this. Doing, boing, boing. And then finally, you had a level right here, which was a 50% level that launched us into a little rally, which was the start of a big rally that took us up to the highs that we saw there. And so what I do, or what I call this, is a launch point. And then you're not going to Google that. You're not going to find it. This is my word that I've attached to it to find it as a significant level. But this is the level where buyers stepped in and took us out of the scary range that we were in. That was January the 28th. Well, let's go forward. Let's mark it off first. And by the way, interestingly enough, that was, if you want to do it, be cute about it, 4, 3, 2, 1. And so today, as we're sitting here on the lower time frames, that many weeks later, almost, what was the 28th? The 28th was almost 4 weeks ago. 4 weeks ago, ping, we hit that level that set up a 50%, which set up for the trade of the day. Back up to here. And 3 to 1, 4 to 1, depending on how you put your risk. And that's all you had to wait for. And so that level was set up weeks ago by a major event that happened during the trading day. And so waiting patiently through all this down, and then for the setup that I like, this is why I like trading, because it's putting all these pieces together and then finding where price tends to make sense. Love it. Love it, love it, love it. All right. We're 5 o'clock. Thank you for joining me, everyone. Make sure that you, again, do the algo stuff. And I'll be putting out my talk that I gave about the Bitfinex hackers. I'll be doing a video on Facebook, and I'll be doing my weekly levels on Sunday. So I should have a pretty busy weekend. Thank you. I'm glad you said something, Cole. I'm glad you reached out. That's why I started the Discord. Everyone else, they have Discords to make money on their Patreons and stuff. I don't want to throw salt, but I was talking about this earlier today. If I really wanted to have a monetized channel, I would sit here and talk about Shiba Inu for 8 hours a day. And I would actually have probably about $1,000 a month from Patreon. But I don't do that. And the reason I made the Discord, Cole, is because I too am sitting in this office by myself trading. I used to have an office. I want to have an office again someday, but I really want to just have a community, and that's what I have now. And so I consider that one of my greatest successes of the last 2 years. So come on, come hang out. See you guys later. Have a good weekend.